What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Sorry, I haven't been able to put out an episode recently. Been out traveling here in New York City. Today is May 10th, and we are amidst a lot of volatility here in the markets. Tomorrow's big report is going to be CPI. We will see if that comes in as what consensus expects, which is 8.1%. Last week we had the Fed meeting. This week we have CPI. Is the market nearing a bottom? Well, I'm going to show you some charts here today, including the weekly expected moves as to where and what the market has been doing recently. Now, when I take a look at volatility across the board, we are still above 30, pushing that 40. This is VIX volatility. If we look at Nasdaq volatility closed at 40.08. So, I mean, this is where this is where things are going to get very, very chopped up. It's a very dangerous place to be. Okay, so that's already in the 40s. And then we have on top of that Russell 2000 volatility that closed at 38.75. So that's also still at this time pushing 40. And it really does look like it's about to break out through this. So we'll see if it's going to take a little bit of a breather. We're going to catch a little bit of relief on this CPI data, maybe bring in some more hope, but then see if this trend continues. I wanted to point out this chart. I haven't brought this one for a while. This is one of my bottom finding charts, and it's the Cohen high-low index. And when it gets down below this 0.05 reading, it typically marks some short-term bottoms or potentially bigger bottoms. Now, there's a big caveat here. First, the week needs to actually close below 0.05. Okay, so the week isn't over yet. This could still tick up. This one looked like it did, but it was actually 0.06, so I never counted this one. Okay, now if you look here, it went below it, and then when it started moving above it, boom, 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 right? It was after a 20% decline, after a 23% decline, after a 32% decline. That was the COVID, and it even tagged the bottom here in the tech bust too as well. And even when long-term capital management blew up, it actually caught the bottom there too as well. Now, the caveat is this right here in 2008, the financial crisis. You can see when we came down to these levels, it marked bottoms and we started rallying, but you can see it started picking off more bottoms where we started rallying, but we still had a huge drop from 2008, mid 2008 to the bottom of 2009. Okay, so as it stands right now, as we get over to these readings, it could be setting us up for a very big bear market rally, and then we continue the trend of lower highs and lower lows. But I do want to point out that we are getting extended here. There's still a couple other charts that I watched that haven't updated fully, like the Pring Bottom Fisher, and just a couple other ones that are overextended to the downside, but they haven't started giving signs yet of relief. Okay, so if we take a look at the BP SPX chart, I wanted to call out this is getting just completely obliterated. We are now below 30 at 29.40 on the reading, and the RSI. We do have a subtle positive divergence taking place here. Okay, now the weekly expected moves, the SPY. So day one, we already reached that lower bound expected move. We moved outside of a little bit more today, and we started bouncing right back within it. Okay, so we have CPI data coming out tomorrow. For some reason, I'm starting to think that the data is going to be coming out and it's going to actually offer up relief to the market, where we're going to actually see either a bounce or we're going to just kind of trend around within this area like we did today. So I think the damage has been done for the week. Now, keep in mind, if the report is, above what it's expected to be and the market interprets that as very, very bad news, what could potentially happen is you push outside of these weekly expected moves. You have dynamic hedging taking place with the big players where they do more selling into that selling, which creates even more of a crash type fall in the SPY, the IWM, and potentially even, obviously, the Russell 2000, okay? But as it stands right now, the market's holding up. Nothing out of the ordinary is taking place. We're still within that expected move range, and we're already lower bound right now, as you can see. If you look at the 15-minute time frame, you can see how it's just doodled around there today. I was watching this falling wedge. We busted out of that. We came back, and we started moving up. So right now, it's just doing its thing, doodling around the safe zone. So it's in a happy place right now. If you start getting outside of that, under 395 and pushing further, some crazy things can happen. Now, as far as, should you be bullish or bearish here? I mean, with volatility where it's at, you need to just be careful. That's really the only thing that you can do right now. If you are trying to take a long position, if it comes outside of it, I would understand that completely. Just understand that the trend here, if you look at the 5-day moving average, it's still going down. It's still moving down, right? So if it comes up to this area, it's going to probably be some sort of a resistance. Okay, and when I look at this, we have a couple positive divergences building, and we have some gaps above us. Let's take a look at the Qs. Okay, so the Qs also, very same situation. We came down right to the lower risk range. Look at just how perfectly it tagged, and look how it tagged it again today. So you can see how price is just doodling around here, probably waiting to see what comes in for the CPI data to really offer up one relief, or if we're going to continue pressing the market downwards here. Okay, if we look at the 15-minute time frame, you can see just how accurate the options market is in pricing in these movements. Came right down here, created a nice falling wedge with positive divergence. We busted out of it. We back tested. We started moving a little bit higher, still beneath a declining 5-day moving average. So the trend, once again, still remains down. If you take a look at the volume shelf profile over here, you can, if it offers up relief, right, and we get this kind of, ecstatic move, just understand that this volume, this point of control right here could be another area of resistance as well as this declining 5-day moving average. All right, the last one that I want to go over here before getting into Bitcoin is the IWM. Look at this. Also, bam, day one right to the lower risk range, and you can see today it got way outside of it. So if you were looking at this and you're like, hey, I'm going to trade this intraday, you could have got this down towards the low, and then it came right back in within that risk range. Now, if you're new here and you don't know what these risk ranges are, these expected moves, 68% of the time the week will close within these ranges, and they've been very, very accurate as forecasting as far as how far the market moves in any given week. And it's just been, it doesn't mean that it can't go outside of them or close way outside of them, but it has been very accurate as kind of looking at highs and lows for the week for the most part. It gets a little bit more intricate than that. And I have a separate movie that'll be in the description below if you want to learn how I put these together. Okay, so the higher end of the risk range is 190. The lower range, we were already there. We basically closed on the spot today with it. You can see it. We moved a little bit higher, doodled around, and then we closed right at it. Still underneath that declining 5-day moving average, we have this volume, this point of control right up here. So if we do get some offer up some relief in the markets, I would be looking still in bearish context, and we may be able to run up from 174 to 186. But that doesn't mean all of a sudden it's a bullish market. The trend still remains down. Okay, so a lot of stuff been happening with Bitcoin recently. So let's walk through that really quick. So first and foremost, this is why I really kind of just look at this buy and sell signal to the Saylor to Schiff tool. It put us on a sell signal, all right. First it put us on a buy signal, right? And we got excited. We're like, yep, buy signal. And then all of a sudden it started moving up and it started curling back around. And we started saying, oh, what's interesting is actually when it started curling around here, it was in a falling wedge. When it started curling up here, it was in a bear flag. So, I didn't take the profits there. I just said, I'm going to wait till the next sell signal. The sell signal came. It got out for basically a 0.05, half a percent loss. And it's a good thing that we listened to the signal, because the signal got off, and then obviously you can see here it's dropped significantly from that point, breaking down from this bear flag. And if I take a look here on Bitcoin on the daily time frame, you can see here is a pretty dramatic, potentially the start of something bigger, or that was a climactic, more of an exhaustion type break here. You can see a big volume bar came in. Now today's price action also looks a little sketchy, so be very careful with Bitcoin here. At 30,000, it hit the 29,000 handle, but now it's kind of just floating around. So we'll see here what takes place, but this is not a dip that I would be just jumping into to buy. Be very careful here, obviously, in this environment. I'll be keeping an eye to see if this starts turning back up and we get another buy signal, but as it stands right now, get out of its way, get out of the market's way, because the market is volatility is really high, and you just got to be very, very careful. Buy the dip. It's not, it's probably being thrown out the window from a lot of people right now, so you just got to continue to be very tactical in this environment. So hope that helps out on today's episode, and I'll try to make another episode here either tomorrow or the next day whenever I can find some free time to do so. But definitely I will have a weekly recap at the end of the week because I will be back home by then. Okay, everybody, see you later.